Most advisors only have surface level crypto knowledge. Bitcoin equals volatile or scary. Ethereum equals smart contracts, and that's about it, right? And compliance frameworks aren't fully built out for decentralized finance assets. Insurance products for crypto wealth are still early. Like, we are still early in the game, right? But I think what you need to know is, or what you should take away from this is, if you want to be a successful advisor, you should always be learning. And one of the areas that a lot of money is moving to right now, if you take Bitcoin as an example, it's been out for 15 years. It came out in 2008. And it has gone from a $0 asset to a $2 trillion asset in that time. It's the fastest any asset has ever grown. And so that's not just for fun, right? There is value there. And if you understand the underlying points of Bitcoin, and that's the one I believe in the most, there are other ones, but if you understand that and you see the growth and you see people like BlackRock and others looking at it, you should understand that there's something there. And so just start learning about it. You don't want to be that advisor where a client asks you, I'm interested in this, and you say, I don't understand that, and then they don't work with you, right? And so you should at least be curious and understand it. Hello. Welcome to another Advisor Tech Trends. You have Massimo here from the team, and it's been a little bit. It's actually been this is going to be a first time that I record today where it's kind of controversial, I guess. In today's podcast, I'm going to be talking about, are advisors ready for a decentralized future? Might sound scary. It will involve things like blockchain and Bitcoin, and I'm not going to get into all the inner workings of that per se. I'm of a generation, so I'm 32. I'm of a generation kind of in the middle of traditional fi, or people call it TradFi, and traditional finance, and the new way of thinking, which is DeFi, or decentralized finance. I'll talk about what that means. I'll talk about where I see the industry going and how advisors can adapt. It's a very interesting time. And as always, feel free to comment. I love it. I love hearing from you guys. And I hope what you get out of today's episode is finance is changing and advisors have to change, because in the next 10 years, if you're doing what you're doing now, it's going to be a wake-up call. See you in the video. Okay, so decentralization. What does that mean? How did it come about? I'm not going to get, and I don't pretend to be an expert. I am a very big proponent of cryptocurrency, mostly Bitcoin. I do a lot of research into it. I've been following it since 2018. I own it, but we're not going to get into that. I just kind of want to let everyone know what decentralization is and why it came about. So in 2008, when there was a bit of a crash, obviously, the great GFC, I think they call it, Great Financial Crisis, there were a lot of people searching, looking, trying to find a way to cut out big investment banks and things like that. People started questioning if we can really trust large financial institutions. And at the time, there was no way to invest money without large financial institutions in the middle, as a custodian, you could say. And so there were all kinds of technologies that came about from that. And one of them is blockchain and decentralization. And I think in today's podcast, I think all you need to understand is there are now secure ways to invest money. And I don't want to talk about all these weird currencies, cryptocurrencies, because a lot of them I think are crap. But there are ways to invest money without a middleman, without a custodian. And it's actually very secure based on blockchain technology. So that's as far as I'm going to go in this. What I think the point I'm trying to get across today, because I've been talking to some advisors who are starting to get these questions from their clients, mostly of a younger generation. I think you need to understand that decentralization, not just in money, in just about everything, is coming, because we found a way to take out the middleman. There will be, in the future, there will be companies, like, for example, Facebook basically monopolizes friendships and relationships online, and they built a network. There will be ways to have a decentralized network where you don't need a Facebook in between to actually have friends online. There will be ways to invest money without a bank in between. And so you just need to understand that. And I want to talk about that a little bit and give my opinion on where I think advisors should start having in the back of their head how
how they'll work with clients. So in general, the financial world is definitely shifting towards decentralization, not just with currencies, Bitcoin, Ethereum, stuff like that, but with investing, lending, ownership itself. There will be a time with AI and all of these robots and all of that, we're moving into a robotic age where if you think about a robot, do you think a robot is going to want to call TD to make sure that they can invest this money on behalf of the client? If the client says something or if the client needs something, they're going to use a very quick method, a secure method to transact. And so let's not go further into that. My opinion is people are going to want to self-manage more and more as the technology allows them to do so. And right now, there's very easy ways to self-manage your own wallet, self-manage your own money without a bank in between. And that's only going to continue. And so basically what comes out of this and where I'm going with this pod is what is the role of a traditional advisor then, right? And so again, this is an opinion, hot take, whatever, take it as you will, but I'd encourage you to just be open-minded and listen to at least what I'm seeing, how I'm feeling, and I'm seeing younger generations as well. In general, there's a lot of lost trust when it comes to financial institutions. And so the younger generation is trying to find ways to manage on their own, but still get the benefit of an increase in their investment, right? And so let's talk a little bit about this. So there's all kinds of platforms out there that allow people to earn, lend, swap money without needing banks. With this blockchain technology, and I'll probably do a whole episode on that, you don't need a middleman anymore. They've decentralized that. And it's very secure. It's impossible to break, like the Bitcoin blockchain, for example. At least currently, it's impossible to break it. And so it's impossible to cheat it. Now, there is illicit stuff that goes on there, illicit investing. Because of this, because there is no middleman, you can do whatever you want. It's decentralized, secure, but you can do whatever you want. So there's all kinds of ways to self-custody your money. So currently, for example, if I have $1,000 and I want to custody that, I would have to go to TD. I'm just using TD as an example, give them my $1,000. Then they would take my $1,000 and custody it and put it in a ledger somewhere that they have that says Massimo gave us $1,000. And then with fractional banking, they then take that, leverage it up 20 times and lend it out. And we don't have to get into all that. But the main point here is that's how traditional finance is. You have a custodian that you trust. They have all kinds of security and they manage your money. There are now technologies that allow you to self-custodian your money. And there's all kinds of passcodes and ways to get into that money, but you don't actually need a custodian. So without getting into how all that works, if you understand that, then a lot of younger generations are saying, okay, well, I want to custodian my own money. It's kind of like the old days, like putting gold under your freaking bed or whatever, your money under your mattress. You can do that in a digital way that is unhackable. And so with that assumption, okay, no longer are the advisors the gateway to investing. The landscape is now kind of open and borderless, right? And so let's go further with that. The old role of a custodian was you get clients' assets, you manage their assets, and you justify advisor fees. Obviously, you would grow their assets, and then you would explain to them, okay, I need a fee because I'm growing your asset. And you focus on access, okay, right? Like, okay, you can get the money, you got to call me, I'll move it out. There's tax reasons, all of that, and safety. I'm putting it with Fidelity because they're safe and they know what they're doing, right? There's a professional management fee, et cetera. That's the old way, and it works. Let's think of the new way in a decentralized world. If I'm someone who can invest in, for example, Bitcoin without talking to anyone, I just have to buy it through an exchange or through another person. I self-manage it. I self-custody it. How does the advisor make fees? And so where this could go is instead of becoming a custodian, you become like a knowledge curator, right? And so what does that mean? The clients don't need access to you to get their money. They don't need access to you to invest their money, but they need access to you for curation or knowledge, right? And so there's going to be thousands of ways for them to invest, thousands of tokens. I know all kinds of advisors, mostly in the States, that are now shifting towards this, where they're like, okay, this is how I think you should make your makeup of tokens, or this is how I think you should secure your assets. And they charge fees on that. You'll also become a risk navigator, right? And so it's not just about ETFs anymore. Clients will need help understanding smart contracts, private key management, yield risks, regulatory risks, etc. And so there's still a boatload of stuff that clients need to understand in order to self-custody, right? And so you, and as an advisor, it's worthwhile for you to understand those things too. The reality is it might not be all your clientele, but it's going to be a large proportion of your clientele that are going to go towards crypto. And if you say, okay, I don't believe in it and whatever, look at the largest asset manager in the world, right? BlackRock. They now have a massive crypto division. They have also launched an ETF for Bitcoin, and it's the best launch ever of any ETF. So people are obviously interested in this stuff, right? And so you just have to have an open mind and start looking at it. You can be a security coach. And so there is a lot to keep in mind when you get into the crypto world. How to secure, like if you think about it, right now, you give your money to TD and you don't even think of security. They figure that out. If you're self-custodying, if you say, I don't really believe in the banks, or I don't trust them as much as I used to, I want to self-custody my money through a cold wallet. Well, if you're taking on the risk of security, you need to know what that means. You need to know how to do it. There's strategies, right? And so that's where your role starts coming in. You become a security coach. You can help them securitize their assets. You can also be kind of a behavioral coach. So as the markets are changing and fluctuating, because it is still a market, there's still liquidity coming in and out of it, you need to understand that and you need to coach your clients on that. And so I think the biggest takeaway for people listening to this that are a bit new to crypto is custody and access to money or to crypto is a commodity now. Anyone can custodian their money. Anyone can get crypto. There's no prejudice. There's no nothing. It's becoming a worldwide phenomenon, especially outside of North America on very unstable currencies. A lot of people are investing in this stuff. And so it's a commodity. Anyone can do it. And so human judgment, security coaching, and helping clients stay disciplined are becoming the differentiators. If you want to fight in this world or be in this world of crypto, you have to understand that. And so what's missing today? Most advisors only have surface level crypto knowledge. Bitcoin equals volatile or scary. Ethereum equals smart contracts, and that's about it, right? And compliance frameworks aren't fully built out for decentralized finance assets. Insurance products for crypto wealth are still early. Like we are still early in the game, right? But I think what you need to know is, or what you should take away from this is, if you want to be a successful advisor, you should always be learning. And one of the areas that a lot of money is moving to right now, if you take Bitcoin as an example, it's been out for 15 years. It came out in 2008, so whatever that is. And it has gone from a $0 asset to a $2 trillion asset in that time. It's the fastest any asset has ever grown. And so that's not just for fun, right? There is value there. And if you understand the underlying points of Bitcoin, and that's the one I believe in the most, there are other ones. But if you understand that and you see the growth and you see people like BlackRock and others looking at it, you should understand that there's something there. And so just start learning about it. You don't want to be that advisor where a client asks you, I'm interested in this, and you say, I don't understand that. And then they don't work with you, right? And so you should at least be curious and understand it. And so the main thing I want you to understand is, like, or in my opinion, advisors are not obsolete in any ways. They're always going to be here. But the skills and the mindset that you have to have are changing fast, probably faster than ever. Like if you think about an asset that's 15 years old and it's gone to $2 trillion, that is very quick. Nothing moves fast in the financial advisor world, or right? And so, but that is. And now you see Trump coming out with a strategic Bitcoin reserve. Like no president has ever done that with things like there's stuff happening. And so you just need to understand why these people care about it. It's not just for fun. It's not just a lobbying thing, in my opinion. clients will soon value security, education training, behavioral coaching, things like that over custodian of their money. And so you need to understand that. And so start learning self-custody, start learning decentralized finance, crypto rules, tax rules with it before your clients do. And I think you're going to be set up for a lot of success. So as always, I appreciate you guys listening. This was one of my more hot takes and more of a personal passion of mine. I really do believe that this is the way markets are going. And I think advisors should be trained and tooled to keep up with it. I'll see you in the next one. If you guys like this, I can make a ton more on this stuff. Yeah, have a good one.